Hello and welcome back. I'm Natalie MacDonald and you're joining me for Sydney Direct on Dukascopy TV, where we take a look at some of the events impacting Australian financial markets. This week I'm reporting from Melbourne and caught up with IG Stan Shamu. Stan, thank you so much for taking the time to chat to Dukascopy TV. Always a pleasure to see you.
Thank you.
So today we're talking Aussie dollar, and Westpac have stated that they see it trading pretty range bound between 75 to 80 US cents for some time to come. BlackRock are pitching at 70 cents by year end. How do your Aussie dollar forecasts fit into that market view?
Yeah, I think being range bound is absolutely where you'd expect it. I would probably say between 73 and 76 cents. I think over the second quarter, it's been more towards that 75 to 80 cent mark. But I think going forward, I think we'll take a bit of a leg lower. The main reason being the US dollar is starting to come back to life a little bit. So that will take a little bit of life out of this Aussie versus the greenback pair. And of course, just considering the fact that the US economy is in a much better position than we are, and of course the fact that we've seen a bit of a stall in the recovery in the short term, then perhaps that range is a little bit more realistic, a little bit to the downside, but still kind of holding around that 75 cent mark.
A recent report by Bish Shrapnel has suggested that should the Aussie dollar slip even to 70 US cents, that still will not assist the Australian economy in returning to competitiveness. Would you agree on that one?
Yeah, absolutely. I think the Reserve Bank will probably want to see the Aussie dollar closer to 65 cents. I think the main reason is you look at all our export sectors, you look at the resource sector, we've seen massive declines in commodity prices. Now, to really get those back up to the levels that they're more comfortable with, we need to see that Aussie fall below that 70 cent mark. And as well, if you look at other areas of the economy, particularly the East Coast economy, we're very dependent on either the foreign sort of sectors. We're dependent on tourists, we're dependent on manufacturing, and less so dependent on resources. So if we are to get that shift going, we certainly need to get this Aussie dollar a bit lower.
Is the kindest thing that the US Federal Reserve could do really for the RBA's hike rates really to help push that Aussie dollar lower, where so far the central bank has pretty much failed?
Yeah, I think it's a double-edged sword, really, because if the Federal Reserve starts to hike, then ultimately this will have an impact on emerging markets. Places like China will start to struggle a little bit more. And of course, Australia will ultimately feel the pinch. I think we want to see growth get back up. That will be positive for us. Commodity prices will go up as well. But at the same time, you get this US dollar kicker as well, because that's going to push the Aussie versus the US dollar a bit lower. And as a result, I think it's about balancing out these factors, what's more positive for us. And ultimately, I think having a lower Aussie dollar will be good for us, but the gains will be limited or capped by the fact that the US is cutting back on stimulus or easy monetary policy.
What's the next key event then that could prompt that next level for the Aussie dollar? Next week's RBA meeting, perhaps?
Yeah, I think in terms of the RBA, I think they're a little bit capped in the short term. I think they're very much in a data-dependent mode or wait-and-see approach, whichever way you want to see it, really. And until we see a deterioration in data, I don't think we'll see a move from the RBA. I think property prices will perhaps be something that they'll be looking at closely. If property doesn't continue to move as fast as it has, then perhaps they might look to cut. I think the property market has actually been the only one really supporting the East Coast economy, for example, with big price rises in Sydney and Melbourne. So if we see a slowdown there, maybe this might prompt the RBA to act. But in terms of other economic factors like employment and the GDP, it just seems like we're just holding on, and this will be enough for the RBA not to make a move just yet.
Stan, always a pleasure to receive your insights. Thank you so much.
No problem. Thanks for coming.
For more FX analysis and exclusive interviews, do stay tuned to Dukascopy TV. I'll be back again soon with plenty more exclusive interviews for you right here from the heart of the APAC region. For now though, it's goodbye.